Hi, how's it going? How are you all doing? Welcome back to another stock market Q&A, the show that's already earned its spot in FinTuit's lineup, as we like to say. And as you know, every Wednesday, every Thursday, depending on the schedule, our agenda, we're here, always on the front lines. 15 episodes already, and seeing the great reception, there are plenty more to come. Today we've got a lot of updates for you, because there are some weeks that are really turbulent in the stock market, and this one is one of those weeks. We're seeing a lot of volatility. We're seeing, as we were saying off mic, stocks that were at all-time highs last week are now down 30%. And, well, you've already caught on. I can't even count how many questions I see in the chat. So let's get this Q&A started. But first, of course, let me say hi to my colleagues. Albert, how's it going? How are you?
Hey Antonio, how are you? As you said, people are joining earlier, and we already have several questions. I'm not complaining, it's better this way, with interaction from the start, which is what we want for this show, even if you've changed the schedule today.
Well, yes, but I actually have some news because of that. Hey, we've implemented it in financial research, okay? Those of you who are members already know this from a week ago. It was something you all were asking for, which is that you'll always be notified whenever we do live shows. For those of you in financial research, we also have exclusive live shows for you, and a lot of times you say, "Oh, I didn't know about it." Well, we've added a calendar, okay? I actually shared it a little while ago in the free Discord of Low Coast to Wall Street. I'll post the link now, so whoever wants to can add it to their own calendar, and that way you'll always know when we're doing a live show. You already know that every Sunday we have the Sanhedrin at 8, and the Q&A session is on Wednesday or Thursday, depending on our schedule. Today we had a few questions, so that's why, well, at 9, which is a great time, so now I'll share that calendar. Miguel, how's it going? How are you?
Well, Antonio, I'm really looking forward to it. It's already number 15. We've really got some momentum going now.
Let's get to it, right? Well, as always, let's start by breaking the ice and talking a bit about the news ourselves, right? We could have chosen a lot of topics. It seems there's been a preliminary agreement between the United States and China as well about rare earths, and uranium has been included among those materials that are especially important to keep in mind. We could also talk about today's market drop. I'm sure you'll ask us about it, but we're also going to talk, and this is the topic we've chosen for the cover, which is really just an excuse, because after that we'll spend an hour with you discussing the market, specifically about the news confirmed yesterday, which, even though it was expected, with some surprise or difficulty, we could say, in the vote. It's a company that, as you know, we've been following on Financias Rizal's Locos to Wall Street, thanks to Mr. Timbits, among others, and that company is none other than DMX. DMX, as you know, is this company that has uranium deposits, as well as a bit of rare earths, etc. in Sweden, and yesterday it was confirmed, right, Albert, that the ban on uranium exploration in Sweden has been lifted. Yesterday, the stock went up. Today it's dropping, dragged down by the whole sector. You actually already mentioned before how you were interpreting this probabilistic play with the company. Albert, what do you think about the situation? Has anything changed for you? How do you see it?
Well, look, the truth is that obviously on a day when everything is falling, you can't always separate the wheat from the chaff when it comes to the reasons for the drop, because several things come together. When we already know that when everything falls, especially the big market leaders, this drags everything down, and especially when the uranium sector drops, it's simply that algorithms, by keywords and so on, move everything in a single basket. But it's also true that beyond that, what we've been saying is that investment theses are usually not just a single. A monolithic narrative, meaning it's not like you say, look, if this happens, it'll be worth 10, and if it doesn't, it'll be worth 3, like a switch that's either on or off, right? Usually, there are several steps and also various scenarios in which a stock can be worth more or less. And in the case of DMX, Fornilla was a clear example of this kind of structure where there are several milestones. The first of all was the lifting of the ban, which is what was confirmed yesterday. After that, there is a new exploration and determination, let's say, of the resource and the economic value that resource might have, and finally it could be the construction of the mine or, in this case, most likely a sale of the asset. The three events are independent. Actually, no, I mean, if the first one doesn't happen, the others are unlikely to happen because obviously, if they don't lift the ban, then it doesn't really make sense to explore, and of course, you're not going to sell it, or at least not at a good price. But what I mean is that just because one is successful doesn't mean the next one will be too, and vice versa. In this case, for example, if the Luma ban is lifted, that doesn't mean the exploration and economic study will go well, be interesting, create value, and it also doesn't mean that it can then be sold or that the other two conditions will be met. So what we always say is that you have to go for the most obvious place, and for me, the most obvious thing in this case, with more than 90% probability, was because the government, the minister, and even the opposition parties had repeatedly said so, and they weren't really that opposed, etc. So, the very first move, when the stock was trading at 30 cents, was to say, hey, this ban is going to be lifted, there's this timeline, and this is going to create value because, obviously, a company that has a deposited TAF mine is valued very differently than one that has a giant deposit of a mineral that's already permitted, just so we're clear. And that's what took it from 30 cents to $1.50, I'd even say $1.60. The problem is thinking that the rest of the milestones have the same probability of happening and will also unlock the same value. Sometimes we forget that this has already gone up fivefold, meaning it's not a company that hasn't already made some moves. In this case, we, or I specifically, right? There are obviously people in the Discord who are still invested, etc. I got out when the first thing was already confirmed, right? Even though it wasn't the vote. So that was a couple of weeks ago, or maybe a little more, right? At that point, it was clearly time to get out. So we exited around $1.40. For me, that's it. Of course, anything else could happen, but the symmetry just isn't the same anymore, or at least that's how I see it. And now, besides it being a really slow day in the markets, the problem is that the next catalysts, they're more uncertain and also further away in time. So, when you have a period with no news, well, we saw it with ASS2, we saw what could happen. And Diego says here, but there's already an old PA. So, you can more or less know what's there. Yeah, but if you look it up, you're not going to like what you find. I mean, the last PEA already told you this was sub-economic, right? So, well, obviously the resource has changed, the new mineralization studies and so on point to something better, but still,
Sorry, you're muted. We're going to start with all the questions, but before we get to them, let me make an announcement. You know we always share the Investing Pro platform, and you know we provide a link and a code that gives you a 15% discount if you come from Locos de Wall Street. Well, investing has already started Black Friday and they're offering a 55% discount. If you add our 15% code on top of that, it comes out to 70% off. So, if you've ever thought about trying out the tool, well, I think now is definitely the time. So we'll share it. You have the link and the code in the video description, and if you're listening in audio format, you'll find it there too. And now, for those of you watching us on smart TV and so on, I'll put the QR code on the screen. So I'll say it again, 70% off for Black Friday, which has already started. On Investing Pro. Albert, let's go with the first one.
he's muted too. Yes, perfect.
Fernando, man, congrats on your amazing shows. Thank you so much. My question is outside the scope of WS. Atomic has launched a crowdfunding campaign starting at €114. Oof, that's interesting. Do you have any opinions about this company or any experience with crowdfunding?
Yes, and actually I saw it. I'm not sure if this one was on Crowdcube. Can you confirm that for me? Because I have a friend who's a fan of the startup scene and also of Paddle. So everything came together for him with Pratomic. I thought the valuation was a bit stretched. I think it was 300 and something million. It's true that this is growing a lot and all that, but you're not getting in early anymore. On the other hand, this reduces your risk. But unlike investing in a seed stage or pre-revenue company, the potential is lower with an established business like this. In general, I don't like them because of the illiquidity that this has. Obviously, you know that if you invest in something like this, you might be in it for 5 or 10 years without a liquidity window. The biggest risk you have compared to other companies is that, obviously, this doesn't make money. If it did, it wouldn't be doing this, right? So, well, it might seem fun because in the end, if you play padel, you're involved, you like these more techy, asymmetric bets, it's fine. But in general, I'm not a big fan. I don't know if either of you have invested in venture capital or startups.
I actually know the company, too. Antonio might not know this, but we're working on it and probably, Fernando, after Christmas. One of the company's founding partners is coming to the podcast, and, well, the founding partner is the founder of 20, which is Ferry Ruiz Hernandez.
Hey, look at that! Someone here says, my uncle created Playmobil.
Of course, one of the first investors was Paco Avila from here in Malabanton. Oh,
Of course, I didn't know that.
yeah. Supposedly, from what I've heard, I don't know if Albert can confirm if he has more info. I think that the valuation came out to something like 25 times earnings or something like that. Honestly, it was.
Well, it must be infinite profits because I think they lost 12 million last year, but
Right, they lost 12, didn't they?
it must be EBITDA or something like that. Or,
25 times EBITDA, yeah.
yeah, that could be it.
Right, and I know the shareholder was Felly. I mean, the founder of 20. I have seen the news, but honestly, I don't dare. With the
Get JSB, put him in touch with your uncle, and we'll bring him on the show. I'm sure he has many interesting things to say. How curious, damn. It's a small world. Okay, then, let's continue. Miguel, there's a Cosmos one out there, isn't there? There's a lot of talk about oil. We'll start selecting.
Okay, the one from Cosmos.
1904, Pablo Postigo.
Okay, 1904. Okay. Why does Combo Energy exclude GTA's capital expenditure from the results for the 2025 quarters? That way it's easier to say that capital expenditures have gone down.
Actually, I have a friend who I think is watching us right now, Jam, who's always blown away by this company because he says he's never seen anything like it, in terms of volatility, narrative, shifts in sentiment, and so on. It's got everything. Honestly, I couldn't tell you. In fact, I hadn't even noticed that. They separated it. As for Cosmos results, just to mention them too, you saw that it had a pretty strange reaction because on the first day it dropped 10% in Cape Verde, and the next day, I mean yesterday, it tanked again, right? And the thing with Cosmos is that it still has to prove that the plans or what they're telling us actually make sense. In the case of GTA, in the end, there are really two assets that matter here, right? Especially Jubilee. But, well, the GTA part is also very, very important, right? This is the ship, let's say, the gas field, and the ship that's operated with GoLat. And here they've had some issues, basically with timing and shipments. In the end, it's done by liftings, just so we're clear, as if it were purely oil they're extracting, meaning you keep producing and when you have a shipment ready, you send it out, right? So they're not producing at full capacity yet, but Gola already told us yesterday that in the fourth quarter they are producing at above nameplate capacity, right? So now we're really going to start seeing regular cash flow coming in from this. And as for the Jubilee Park, it's a field with a very steep decline rate that they share with Tullow, right? And Tullow said this would already be producing over 100,000 barrels a day this year, but the reality is it was at 60,000. There had been a lot of negligence in maintenance, drilling, and so on at this field, and now they're taking care of it. The wells seem to be looking really good, but the ramp up is a bit slower because now they're at 65,000, and it's likely that in quarter four they'll be at 70,000 or so. The question is whether they'll be able to reach 90,000 or 100,000, because the issue here is that if you have economies of scale and fixed costs, that's going to help you. They're also going to stop leasing an FPSO, and if they operate it themselves, that's also going to significantly reduce costs. So just by moving your average costs, say, from the low 60s to the mid 50s, it completely changes things. That's a game changer because you stop burning cash or just barely breaking even, and you actually start being able to refinance, pay off debt, and so on comfortably. So I didn't think they were bad results, just in line with expectations, and the problem was that it was a bit disappointing that the guidance for Q4 wasn't more aggressive. In other words, that the outlook didn't improve a bit more quickly.
We're going to shift between raw materials, stocks, let's call them, and pure value investing. One of them could be Adidas. Salva Soriano. Hi, how do you see Adidas' rating now after these results? Adidas is a company that sees you liked it, right? I believe the market has already priced in the recovery, or there is still room for appreciation by 2026.
No, quite the opposite. It's a steal for them. Look, let's start presenting, okay? We're also sharing the screen. Let me know when you can see it.
I can see it.
Okay, this is, well, you already know, what we always use, right? Investing Pro, which honestly works really well for me. This is a company that had the typical chart we all know up until 2022, right? A quality company that goes up and to the right. And this was trading at 300 euros. Obviously, in 2022, everything dropped. Inflation, rising interest rates, more consumer problems, etc. But anyway, it bounced back. It was at 257 in January of this year. We're not talking about 3 years ago, this year. And during this period, as we said, in January it was at 250, now it's trading at 157, 158. Even in April it was at 200, way below Liberation Day. The company reported results that, to me, are pretty reasonable or actually quite good. Let's look at it now by quarters. Let's see if they've already uploaded this, the latest quarter. I'm going to select fewer years. Yeah, okay. We can see that in terms of revenue, the company has already shown pretty reasonable growth by September. In other words, it looks like they're starting to get back on track with their guidance. It's also been positive in terms of both revenue and, above all, profitability. If we look at the underlying components of this revenue, if we check the report they released, they're growing both in the Adidas brand, in their own stores, and in wholesale, which is actually where Nike is struggling a bit, for example. And then when we talk about valuation, right? About how much this might be trading at, let's look at it in years now, okay? But anyway, per quarter, this is generating about $10 or $11, well, euros, sorry, of earnings per share. So it's a company of this quality that's growing quite a bit, doesn't have a stressed balance sheet, is also doing some small buybacks, pays a dividend that isn't that generous, and is trading at 13 or 14 times earnings. It's a company I really like, and I think it hasn't recovered or been properly valued yet. Right now, the whole consumer sector is taking a hit, but they're still growing. Their brand rivals Nike. It's the only company I think compares to Nike in brand quality here, but with a very different valuation. So, I find it very interesting.
Well, very interesting. You see, a lot of times we make things complicated when adding companies, and right around the corner, there's an interesting one to look at. All right, Miguel, let's move on to another one.
Let's see. Pablo, a question for you. Besides, Pablo, we also have the latest report from the company. Good afternoon. Update on Valaris. How are day rates expected to evolve? How could low oil prices in 2026 affect them?
Well, look, we're already seeing some clear signs of improvement. In the case of Valaris, it mainly operates drill ships, which are the largest vessels, and also jackups, which work in shallow waters. For the jackups, one thing that had really affected Valaris was the suspension of some contracts for these rigs that they had. From Saudi Aramco, right? From the Saudi state-owned company. And also, on the other side of the world, another of the most prolific accounts, which is the Gulf of Mexico, or now the Gulf of America, right? Which, as we should call it, is where Pemex operates. And they had also canceled and weren't paying some of the contracts that affected BR more. And in this case, both Saudi Aramco and Pemex are starting to request jackups again, okay? So it's a segment that already has an authorization rate of over 80%. Which would now go up to over 90%. So that's going to put quite a bit of pressure on the rates and should help a lot. With drill ships, projects have been delayed much more, and as you said, if oil prices are expected to be low in 2026, that doesn't help. The thing is, you have a natural decline and you can't postpone investment forever. So they're already indicating, both they and their competitors, that in the second half of the year of 2026, we're going to see a pretty strong rebound in terms of contracting. So with utilization also at around 85%, etc., right now there's oversupply, but not excessive, so things could get pretty tight again. So I'm pretty bullish on everything offshore, and especially on Valaris.
Well, we're not leaving the oil sector just yet, because Gladius has a question for us. About the oil thesis, how do you assess the impact of a possible future lifting of sanctions on Russia and the situation in Venezuela? Regards.
I would separate them. For Russia, there's no real impact. Sentiment-wise, yes, but that oil is already exported. Russia hasn't lost production since 2022 and is still exporting. It's true it's going to India and China through back channels at different prices, but not in volume. Where does it have a big impact? On tankers. Trade routes are disrupted, so transportation is over different distances to other places and so on. That's where it has a big impact. In Venezuela's case, it could have an impact, since it's the country with the largest oil reserves. But the problem is they've gone so long without investing, and it's bankrupt, so it would need such a massive investment that it's not. Something that could be done in a year or two, not even close. And even less so if we see a collapse of shale, as everything seems to indicate, and supply problems in other regions, that it would basically just be a compensation and not really add anything new.
Albert and Farrell ask, and before getting to that question, just yesterday we recorded a geopolitics podcast where we talked about rare earth and more, and I recommend you all listen to it next Saturday because I think it will really give you some perspective. All right, questions. After China's extension to the United States regarding rare earth exports, it's clear that the West needs to develop its own mining, but also its own processing and refining capabilities. How do you see its core business in this regard?
I completely agree with the first part, but I don't know the company. If you guys recorded the podcast and want to comment, Antonio, Miguel.
Miguel talked about it, he recorded it, specifically with an old friend of the community, who is a very interesting person because he's an economist and an army reservist. And actually, well, Miguel, tell us, what did you guys talk about? About the world's geopolitical issues and the economy, right?
Yes, it focused more on geopolitical topics, war, and so on. I mean, he did talk about chip topics, chip development, but it's true that mining and related topics weren't really discussed, and even less so about specific companies. So, in the end, it was a bit more general. So honestly, I can't really say anything about this company.
All right then, that's fine. We're sorry about this company, Farrell, that we can't give you a more detailed explanation. Well, today we're bringing the main topic of DMX, and there are a lot of questions that are kind of tangential, because, for example, we're going to do a mini segment with questions that, as we said, are tangential to all of this. Here, Ferran Grau is asking about the possibility of uranium ETFs coming in February, meaning that DMX would be included. How do you see that possibility, Albert? You're muted, you know?
Oh, sorry, I was saying that I do think it could happen, that in the end the obstacle was obviously that this couldn't be considered, and in fact, there was speculation that this might happen a few months ago, if you remember during the last rebalancing. I do think it could happen, but the problem is, look, I don't want this to sound bad, but our thesis or our idea shouldn't always be that there's going to be a fool who comes along later to buy it, okay? So obviously, that is a catalyst in terms of flows and especially in terms of liquidity. There, it really is important because the problem is that you might not be able to get out of this investment. You could have paper money, but there might not be enough liquidity to exit, and that's what this provides you. But what I mean is, of course, you have to think, okay, I want to offload this mine onto someone else. Will they actually buy it from me? I would buy it. No, because I don't like the deposit, because I think this, etc. Well, then, of course, you're already relying on passing it off to someone else, right? But, well, that's a bit of a risky line to walk. And
Now there are three that are very closely related, so we're going to group them together. One is from Condition, which says that after the lifting of the uranium ban in Sweden, there's another relevant long-term company like DMX. Horacio Campillo also tells us everyone talks about DMX, but not about Aura, which will also benefit. And Horacio himself also says that companies like Studic will tend to rise with the removal of the main obstacle to uranium in Sweden. Albert, how could this affect other companies? It's true that the community has really focused on DMX. Are there others that will benefit?
yes, in the case of Hora and the Hagen deposit, that's also very interesting. Plus, you have assets in other geographies. So for me, it might actually be a bit cheaper. What happens is, the good thing about playing DMX is that it's a pure play, a direct bet on this. In the end, of course, that's all it has. So the correlation between this news and this flow, let's say, of regulatory changes and the price is clear. That's why I like it much more than Aura, but there are others that will benefit. I only know about that, the Hagen deposit and Aura. I don't know about this other one you mentioned, Nupdisk. I can't remember which one it was now.
Yes, Nubdisk, that's right. And well, now the last one for now from MX. Francisco, hey, not to sound cheeky, Albert, after today's or yesterday's catalyst, do you still think you got out at the right time, or if you had known this, would you have held on? I think you've answered that before, right?
Yes, actually, if it's who I think it is, besides. Well, we talk very often, very often. I think so, because earlier he said he was kind of an economist, now I see it.
Yes, that's true.
A subscriber, and I don't take it as a joke at all. On the contrary, he's someone who knows a lot and is very respectful, so there's no problem at all. Look, it's always hard to know if you made the right call or not, because the only feedback we have is the price, especially in the short term. And whether the price goes up or down doesn't validate or invalidate our decision beforehand. It's immediate feedback, but it doesn't tell you if you were right, since you could be right for the wrong reasons, or the other way around, or just for a moment. In this case, when I sold, I saw this information was already factored in, even though it wasn't confirmed, it was priced in. And in that sense, I still believe that's the case, and that's why I exited. On price, I could have sold for more, even yesterday it was higher. It could rise more, especially with a good PA. But that's a different thesis, not the one I want to follow. So, I think I did the right thing in terms of my investment process by believing that this was already priced in. But of course, and many of my friends, your friends, Antonio, our friends, are in it, for that matter, right? Mr. Timbits, as we mentioned, who has shared it, and hopefully it goes even better. But I think this part was already priced in, and that's why we sold, and I think it was the right thing to do, honestly.
Yeah, well, here you're talking in the plural about we sold, Albert and I, because as you know, reserve subscribers, we discuss the trades among ourselves and with them. There's a train lot where we talk about the trades a bit. To build a community and see what everyone is trading, without it being any kind of recommendation at all. Albert sold and I sold too, but in my case, I can't remember now, either 80 or 90% of the position. I kept a small amount just in case it goes to the moon, so it's there, on the rocket. Albert is more mathematical, more methodical than I am. He says, hey, I sell, so anyway, let's keep going.
Albert, I'm going to Gallo now, who just asked another question. Hey, what's up, guys? What do you think about Relix's drop today? Do you think it's a good time to get in?
I don't know it.
Me neither. I don't know.
Miguel,
I don't even know what they do.
I was just looking at it. Yeah, it rings a bell because Remitly, it's something like a financial service or something like that. But honestly, I haven't looked into it. I don't know.
Nothing. It doesn't ring a bell at all. Remitly Global. Q down 23% today. No idea.
There are several, including Celsius. Today, the market punishes you severely. Any small deviation will cost you dearly.
Well,
Duolingo has hit A.
Strong too, another 30. That's true.
a 30, but it really surprised me because the results haven't fallen. It wasn't that bad either. From what I've seen, it disappointed. It's a very vertical reading. It just didn't meet expectations. But the market, as you say, if you don't beat it, even by a little, it punishes you hard.
Francisco Martin, seeing how API is dropping.
Well, it's reasonable in the sense that, in the end, it's a company that still doesn't have anything to show. They said they would do the QL spin-off in Q4, and here we are, November 6th. Today, it seems a news story came out that seems to point in that direction. With a restructuring of the vehicle that it looks like they're going to use, the SKLB1, but we still haven't heard any news. There aren't any commercial agreements, meaning, yes, there are some understandings, but you don't have the figures, etc., to be able to model anything. So, well, for now it's just smoke. I like the company, don't take it as an insult. But that's just how it is, and on top of that, the whole uranium sector is down and drags you even lower. So, well, I think until they show something, or meet some deadline or something, because everything is always late, well, then the market makes you pay for it.
Albert, is there a chance that in this very spin-off we're in, those of us who are shareholders, the company could pull a fast one on us?
Yes, because in the end, management is good at some things. I mean, these are people who have built this up, and they're executing really well. They know exactly what they're doing, etc. But in the end, and this is just my personal opinion, they're kind of pirates, like a Greek shipowner. For those of you who are into shipping, you know what I mean. So, well, the moves they're making aren't exactly pretty. I always talk about this with a friend we have in common. I'm not going to say his name, but anyway, a friend we both know, and he sees it the same way. He says, look, their mindset is, this company is mine, right? So I'm the one who's going to make the money. And you, since you're a minority shareholder, you'll still get something out of it. I mean, you'll get a few crumbs along the way. But let's not think they're aligned with us, not even close. In the end, the real money will be made by just a handful, and the rest of us, well, if we manage to jump on the bandwagon, good for us. But we're definitely not their priority, and that's pretty clear. I don't know. Antonio, what do you think?
Above all, Albert, I think that's a very honest opinion. A lot of times we're a bit hesitant to give our honest opinion about things as we see them, because then you end up getting criticized. I'm sure you'll catch some flack for what you just said.
Yeah, but
Also,
there's also a kind of hooliganism in saying, hey, I have this company, so everything must be good and perfect. But that's not true. I'm a shareholder. I run it. Don't think I'm just. But you also shouldn't fool yourself, and you have to see things for what they are. At least that's how I see it.
fantastic. Albert, let's switch gears. A totally different company, Princess. Roll says, "Hi, can you talk a bit about Princess's IPO and its short-term potential?"
Yes, it started trading this week. Well, as you know, for those who don't follow it closely, it's a spin-off from New Princess. The names aren't exactly creative. In the end, it's Princess Group and the holding company New Princess used to be New Lat, and also because of Central Lake, what it had, as I said, they didn't put much thought into the names. The IPL was a total flop. There was absolutely no demand, which is why it came out at the low end of the range, and they had to keep 82% of it themselves. So there was no demand. But I'm very bullish on this. In the end, the CEO and the family bought another 20 million. That, to me, says a lot when they're by far the main shareholders. And I think having a separately listed vehicle is really good in the long term because, in the end, it unlocks value, clearly separates it, gives you liquidity, and so on. So, the fact that there hasn't been liquidity or demand for this IPO right now because of the sector and because it's in London, well, that's just the reality, but I really like it. I prefer New Princess over Princess, the holding company over the operating company, but I find both of them attractive.
Albert. Jonathan Zambrano mentioned Zoetis, which I believe Emerito Quintana recently added back to his portfolio. It dropped about 10%.
It also dropped by about 25%. You are absolutely right about that, but honestly, I do not follow it closely enough to say for sure.
Jonathan, I think Emerito is presenting, or he has his investor meeting this Saturday. Maybe he'll talk about it. I don't know, but
It could be interesting. Goeasy, any thoughts on companies linked to crypto? Go on.
This one's Javi's. Antonio. Show actions if you want.
Yeah, if you guys want. Let's see. Well, if the market here is really, really, really volatile, well, then here it's directly tied to the whole crypto thing. Look, I'm going to share my screen for a second. I'm going to share my screen. Just a second. Oh, wait, hang on. It's this one. Okay. It's just that I have several screens. Look at Iron's stock price. Okay. Let's close this one and open this one. Well, yesterday it went up 14%. But just this week, look here. It went from 60 to 72 in a single day. Why? Because it announced a $9.7 billion deal with Microsoft to supply them with energy. And now, look, you can see today's drop. Today is a tough day. And they're releasing their earnings right after this program ends. There are a lot of rumors that the results will be good because they've actually moved up the earnings release. Today, well, I think in the end it's being punished. Dragged down a bit, right? Everything related to energy today is dropping, uranium, and so on. This doesn't make much sense to me. But it's a very volatile stock, you know? All these stocks are really volatile. And well, that's it. Look, here with volatility, it obviously creates a lot of opportunities. For example, anyone who's bullish on iron, damn, you don't even have to reinvent the wheel, you know? Just look, simply by selling a put at 65 for December 19th, you pocket $1,000. That's no joke, right? The implied volatility is through the roof. What would I do? I'd add a put purchase to it. If anything, at 55 we put on the handbrake, $455, which is a nice amount. The maximum loss is also capped. It's a completely symmetrical position. Maximum profit is 455. Maximum loss is 545. And that's it. This, as I always tell you, you can add as many layers to this as you want. You can even say, well, I'll change it up, change the expiration, take the call purchase a little further out. Okay? I'll take it a little out of the money. And maybe here I do too. Here I do too. And look, well, even so. Sorry, it's just that I put here. This one slipped by me and I switched from a put purchase. Sorry. From buying a put to selling a put. Sorry, as I was saying. Well, so here you can decide for yourselves how much you want to invest. This trade here would cost you 550. Well, so here you have this bullish opportunity. It's a company that, honestly, everything related to this sector, like for example Hive Technologies, is exactly the same. High technology, if we also look at the risk chart, I'll share it in 30 seconds. Here you have it. It's a roller coaster. It went up to 7 just recently, just a month ago. Look where it is today, at 4.83. And just the same, it pays a lot. A whole lot from options trades. Take a look here, we're talking about. Sorry, let's switch this to a put, and here we sell a put. Okay? Selling a put at 4 gives you $42. That's a pretty decent return. In the end, well, this means investing $400. And you say, well, I don't mind having to invest. Thank you, $4,000. If you go in here with 10, well, that's 425. And watch out, look at the safety margin it has. This stock would have to drop from 482 to 4, almost 20%. You can see it for yourselves. There's a lot of volatility in these companies, and they're not for the faint of heart. I hope I didn't ramble on too much.
No, Albert. So, Dr. Poe is asking about Petrobras. Are they reporting earnings? I think they announced layoffs this week, but I believe the earnings won't be bad.
Yes, this quarter the price of oil has been a bit higher than in the past, so that's good. It's true that now it has dropped quite a bit and the outlook isn't as positive, but overall, it's fine. Production has also gone well. I think the results will be good. And they've also had exploration successes, an arbitration win, which I think is the one you mentioned, and so on. So I have quite a bit of confidence in them. It's a company you all know I love, so no big surprise there. I really like it.
Albert, there's also a question here from EHP265. Good evening. What do you think about investing in biomethane? They're starting to really bet on it.
That's what I'm hearing, that you all have seen this.
Me neither.
Yes, there's talk about biomethane. This is already the second or third time I've heard people talk about biomethane. But is there any specific company? Or is it more of a sector thing, like an ETF? The other day, too, in other discussions, the topic came up, but I didn't look into it further. Well, if that's the case, let's have someone comment on it now. Baran Grau, also a buddy of ours. I think he follows us. He's in the pharma sector. But today I heard about Revolution Medicine. If you want, we can take a look at it in the reserve. Whoa, tell us about it. For me, the pharma sector is one I just don't touch.
I only used to follow AbbVie, which to me is pretty much the best out there. Let's also take a look at some numbers from AbbVie if you want, because it's a really interesting case. Look. Okay, I'm already sharing my screen. Great. They had the best-selling drug in the world, right? Now it's Tetra's turn. But before, it was Humra, which was theirs. And what's the problem with pharma companies and these drugs? It's that eventually you lose the patents. So, when you no longer have exclusivity, you have a problem, because what was up until then almost a monopoly, well, generics start to appear and undercut you on price, you lose a ton of volume, and it's a real disaster. So, what these companies usually do is try to replace the revenue they lose, let's say, with another drug. In AbbVie's case, here you can see how their revenues were doing. okay, up until 2 years ago, and then they dropped a bit. That's obviously because of the loss of the Humira patent, which, as I said, was the best-selling drug in the world.
This company made a perfect transition. 2 or 3 years before losing the patent, they started ramping up two drugs, Rinvoq and C.I.A.S.A, and with those they've made up for lost Humira sales. There hasn't been a collapse. Sales have stayed flat. You haven't grown, but now you're starting to pick up speed.
So it's a company that's cheap because when you're about to lose these patents to other companies, right? For example, I've seen it with Myers Squibb. The market already punishes you since it expects that. But when it's over, look how well it's done. I held it in 2021 below 100. I wish I still had it, right? Because it's been amazing. But I sold it when I rotated into energy at the end of 21. So I made about 20%, not much more, right? But thank you. It's a company I love. I don't know the other one, but Farhan, I encourage you to share things in the research because I'm sure it'll be interesting.
Yeah, Farhan really looks into things thoroughly. We'll definitely contribute there. The HP specifically mentions biomethane here. It says sectorial in Spain. Naturgy is strongly committed to this, and Sanji's regulations promote it at a European level. Well, there we have the information. Okay, let's continue. Joan Maria Algara. With interest rate cuts, it seems that the time to start investing in rates is approaching. You mentioned that there's a report planned on the rates sector, right?
It's not the most immediate one, but it's a sector we want to cover as well. So yes, but before that we have others, as we already know and have mentioned many times, right? Like payment methods. Yes, we will cover rates. It's very interesting.
And what do you think, Albert, about the topic you mentioned regarding the interest rate cuts?
I like them not just because of the rate cuts, which obviously help, since REIT companies can finance themselves in two ways, right? The first is through debt, which is the classic way, and that's where it helps. They all have debt, or well, if not all, almost all, because in fact, real estate without leverage doesn't make sense, right? But there are others that also take advantage of growing or operating, let's say, in good sectors, so they trade above book value, and what they do is issue shares, which is another way to finance themselves. That's interesting. For example, realty income. Some already benefit. Overall, it's obviously a catalyst. If they lower them in a recession, it's a trade-off. They protect against inflation, which helps.
Albert, I always love this question. Mar, thank you. What is your opinion regarding portfolio rotation? To achieve high returns, do you need a lot of rotation or just a little?
You don't really need one or the other, since you can make money both ways and outperform the market with either approach. In my case, Miguel and Antonio, you can share your views, but for me, rotation matters. It's not just about total rotation, but sometimes just adjusting weights. Dynamic portfolio management is key. We've discussed this in courses like investing with a long-term mindset and investing in the stock market, right, Antonio?
Yes.
We've run sessions on portfolio management, as it's often missed. You see it here, how many questions today, which also makes sense. How many are about investment ideas and how many are about portfolio management? Well, that already tells you a bit about where the focus is placed. And that's normal, but it means neglecting a part that's half the process. I don't know how you all do it, but
For me, honestly, that's exactly how it is. Here, we only focus on getting it right and missing ideas. Hey, DMX goes up, whatever. No, the most important thing isn't getting it right or wrong. The most important thing is what weight I give to the ideas I get right. When I get them right, what I do when that stock is a winner. Do I let it run? Do I trim it? do I see if it's worth cutting back since I've already made a profit and invest in something else? That's everything. It's everything. An investor has to go through different phases, and that's exactly what we're emphasizing, just like you said. Let me take this opportunity to mention that today is November 10th, and next Monday, the third edition of the Investing in the Stock Market course begins, where Albert is one of the standout instructors, and we're also doing it together with the two Dinero Nunca Duerme team. And we really emphasize that because investing in the stock market is so much more than just choosing whether a company is cheap or expensive. That's one part, and I'm more and more convinced that it's not the most important one. But anyway, that's a topic for a long and drawn out debate. Let's keep going. Wow, goeasy really took a hit today. Well, goeasy is a Canadian company, as you know, mainly focused on loans, especially auto loans, and I wouldn't go so far as to call them subprime loans. I don't really think that's.
Say it, because they are subprime, but not in a negative way, just as a description.
Of course, the thing is, I don't know. I get the feeling that a lot of times with subprime loans, it's kind of like what happens with the term senior citizens. You see, for example, my dad goes on trips organized for seniors, and he's in great physical shape. But you end up with people who are 65 and people who are 90, and they're all just called seniors. Well, it's kind of the same with subprime. With subprime, it seems like there are loans that are more, or lenders that are more about lower quality loans, and others that are a bit better. But still, we could probably categorize them all as subprime. Albert, do you like that topic? Do you like the company?
I mean, you know who really follows this company and is a huge fan? An analyst we have in research, Mr. Kamikaze. He follows them a lot, and today we were actually talking about it because of this drop, so it's fresh in my mind. As for fundamentals, I like it, yes, a lot. The business itself, ethically, not so much, right? But anyway, it's a company that, as you can see, is growing a lot and is very profitable. Right now, it pays a dividend of about 4 or 4.5% and trades at 7 times free cash flow, so it's really cheap. But what is the market afraid of since it has dropped? It's fallen due to a sharp rise in provisions. As we discussed with Mr. Amagas, the provisions aren't just from a worsening loan portfolio, which would be bad, but also from growth, right? Because if you know a bit about accounting regulations, in the end, you're required to set aside provisions. You know this well too, Antonio, for the future losses associated with that credit growth. So the strong growth has hurt them in that sense. But what the market is really afraid of is that there could be a severe recession in Canada and that this could drag you down, right? So, yeah.
Of course, the thing is, when recessions or crises hit, banking crises, for example, these kinds of loans are like revolving credit cards. They're the canary in the coal mine, the first thing to go under. And that's normal. People would rather stop paying a finance company before they stop paying for their house, even though in the US. And I assume it's similar in Canada, over there. Without a car, you're nobody. And over there, the laws make it easier for you to just stop paying and lose the collateral, like your car. So, well, we'd have to look into it. But yes, it's definitely a business. Look, all right, let's keep going.
Albert, here's one you've mentioned in several Q&A sessions, Jamie Gonzalez. Hi, Albert. Would now be a good time to get into red after today's drop?
Well, especially after the drop on the 4th, which is when it dropped. I mean, it dropped today too, but I'm talking about the big 10% drop that was on the 4th, right? With the capital market day. And this is where I'm a bit conflicted because I love the company. I think it's extremely cheap and it has a very high quality business model. And the problem I see is that management is really bad at capital allocation, which is the most important thing. You have a company that's growing. Maybe growth is a bit lower than expected, but it's still growing well and will likely keep doing so. With a quality business, you do the light version and generate capital.
At 7 times free cash flow, buy back shares aggressively. Unless you think otherwise, the dividend is the priority. Keep it sustainable. I love dividends, but not when they're a straitjacket. When you're
So tied to it that it keeps you from making the right decisions, which in this case would be to cancel the dividend and do buybacks. And if anything, pay off debt if that's what you want, right? But above all, do buybacks. So that kind of disappoints me about the market. Between the growth and that, well, that's where we are, right? But for me, it's an opportunity in the sense that it's still very cheap and a really high quality business. Hey,
Alberto, well,
Sorry, go ahead.
no worries. I just wanted to ask you a question. At the management level, do you think capital allocation is almost the most important thing?
for me, yes. That can totally change your outlook and the direction of the business. If you know how to allocate capital and create value, knowing when to issue shares, which isn't always bad, when to buy back shares, handle dividends, pay down debt, that's key. If you execute well, that's how value is made. That's most important in management.
Salon Richard actually talked about that too. A large part of the drop that goeasy has been experiencing these past months is indeed due to a short report. Mr. Thimbis, we have a distinguished viewer here, he says yes, but there is no handing over of the vehicle as payment in this matter. Yes, let's see. He can definitely tell us how loans work in Canada. I was referring to the fact that I do think there are supreme loans that are secured by the vehicle itself and they can repossess it, which is harder to do here in Spain. But hey, you're the one who knows. You're over there, but I think I read that once. And here too, about goeasy Javier, we just talked about it. You must have joined just a minute ago, maybe 30 seconds late. CCOR, John Maria Algar asks us, could it be a good option in case a possible recession is spotted in the United States? I don't even know what this company does.
Negra.
I was just looking it up right now. I have no idea either.
Well, if you could tell us in the chat, John Maria, we'd appreciate it. All right, so any particular news about TTL? Ernesto Alonso Morales, greetings. TPL? I was going to say teleperformance, but that's not it.
Me too, but Texas Pacific Land, I don't follow it. And you've mentioned it quite a few times, huh?
I'm up about 10%. I don't know if they've reported earnings or something, because honestly, today isn't the kind of day for this sector to go up 10%. There must have been something. I'm sure there was some news. We're also being asked by JM3392. Oracle.
It has given back almost all the gains it made after the deal with OpenAI, and honestly, sometimes these things are just nonsense. I think the investment commitment was $300 billion from OpenAI, and their revenue is 13. Today, they've even submitted a request to be bailed out or to get guarantees and backing from the government. In the end, it's what we always say about AI. The problem for me is that the numbers just don't add up.
The numbers just don't add up. It also feels to me like that's exactly what we're saying. OpenAI. They sign a contract with one and then another, and in the end, it's always the same 4 or 5 people talking about contracts among themselves. I don't even know which ones. The numbers just don't add up from either. Look, Jordy Bosch, Albert, what's the worst thing that could happen to a retail investor who's in DMX today? A takeover? Dilution?
A takeover wouldn't be bad. I mean, maybe it would annoy you because you can't realize, thank you, all the value you believe this company has, which I get, but that would be more of an opportunity cost issue or unrealized potential, which can be frustrating, but it's not bad in itself, right? It's an economic risk, but not a financial one, right? Like selling calls, just so we're clear, right? It could happen that your shares get called away at a lower price than where they end up going, and you feel a bit foolish. But if that's the worst that happens, so be it. It's not the same as selling puts, etc., or buying calls, right? Which could end up being worth zero. So I don't see that as a bad thing. And dilution, that's definitely going to happen because in the end, well, maybe they have enough money for an exploration campaign, etc. But eventually, it's very likely they'll dilute, not excessively, or at least they shouldn't, since they're not building the mine, right? But if they do more exploration or other things, you could get diluted. If it's not significant, it's not a big deal. For me, the main risk is if they do a PEA and everything goes perfectly. But there's no exit or liquidity event like a buyout or a sale, and they tell you, no, no, if this doesn't get sold, then you either build it or nothing, and building it, to me, wouldn't be that interesting for the shareholder. And in fact, management has said they don't want to build any mines, that their plan is to do a corporate deal. But one thing is the intention, and another is the reality that actually happens, which doesn't have to match. And
JM7392 also asks us if we know the company PSIX. Power Solution. It's a very interesting company for anyone interested in AI and energy. Well, I don't know it, but I understand it's more or less the same as the others. You know what I mean by the same as the others. It's not meant in a negative way, just like the ones we've mentioned like Iren and so on. There are a lot of companies popping up precisely because of this trend. Albert, let me ask you, did we talk about this ourselves? Just yesterday, in a session we had during a course, we believe, and I think you're on the same page, judging by your recent articles in Riser. I encourage everyone who isn't already subscribed to LWS Financier Riser, at least to the free part. We send out an article every Sunday at 9:30 with a weekly summary. We talk about stocks, discuss the macro situation as we see it, and so on. Just like we said, actually, we mentioned this in the last Sanhedrin, I remember with Edgar. Just like we said, we didn't know what was going to happen with AI, and that there was a lot of spending, and it was clear the numbers didn't add up. Could energy companies end up being the winners? How do you see that, Proxy? I mean, companies like these tech ones, iron and others, nuclear, oil, coal, which you also keep an eye on.
yeah, well, actually, some reports have come out. Several companies, including Microsoft and so on, have said that the current bottleneck isn't chips or hardware anymore, but rather power, energy. And I pretty much agree with that. So if that's where the bottleneck is, then it makes sense to play that angle, right? And the good thing is, you don't necessarily need it to succeed because of AI, right? Because that could be an optionality and extra catalyst, great, but it doesn't have to be the only way to make that money materialize. So yeah, I think it's actually pretty interesting.
Marcelino Chow, let's try another you mentioned, Predictive Discovery. Also Alberto Lavandera from the London family. He may like God Ash, but I don't know it.
Yeah, for me, I mean, I heard about it actually in a value investing on the podcast. And yeah, I thought it was interesting because, well, in the end, it's gold too, and Tulio, but because of the people behind it, I trust that it makes sense. And it seems like the deposit's economics were also very attractive, but I don't follow it closely enough to invest in it, etc. So I liked hearing about it, or rather, it seemed to make sense to me.
Albert, and to finish up, Javier Echeverren asks if you have any opinion about cement companies, tailwinds for this sector, etc. Yes.
For example, in Argentina, humanity has taken a gamble. That's interesting, but the problem is it's like shooting dice, low margins, and you're dependent on energy. It's energy intensive. This would conflict with the thesis we mentioned earlier about energy and AI. It's one or the other. You can't have both.
They could hedge each other, so one could offset the other, and it would make sense.
But it might end up like what happened to industrials in 2022 when there was an energy price spike.
All right, we've reached the end of today's stock market Q&A session. We've had almost 600 people live with us. Truly amazing. You know we really appreciate your likes, your subscriptions, and hitting the notification bell so you don't miss anything. Remember, thank you. We put in the very first comment of today's chat a calendar we've created for you to add, just like Research members have for the live sessions we do for them. This way, you'll never miss when we do a Sunny Dream, a Q&A session, or any live stream on YouTube. It's a YouTube live stream calendar in the WS. You have it with your calendar, and it's also in the video comments. And also, just a reminder, it's Black Friday already, it's here. On the platform we also use to check stocks, which we've mentioned today and in other Q&A sessions, investing. With our code and the link, you get an extra 15% off on top of the 55% they already have for Black Friday. That's a total of 70%. If you've ever thought about using the tool, well, I think now with a 70% discount, you really have no excuse. Albert Miguel, thank you so much for being here today.
Thank you, and especially to everyone who tunes in to listen to us.
That's right. Many thanks to the almost 600 of us here right now. And on Sunday at the Sanhedrin, Edgar will be joining us, and he'll definitely be bringing lots of updates. A big hug. Bye.